Hello people, this is Mel's Rolex FX again. I I just wanted to do this video, although I don't normally trade my indices around this time, but I just wanted to make people understand what is an order block. You see, I took this trade from here for buy. You see, there's a green candle here. Let me do this. Okay, let me do this. You see this green candle here, this green candle here, it is the one that caused this explosive move. You see here, the elephant was getting into the water. So I took a buy and I placed my take profit just there on the week of that bearish order block. So you will see once the market gets by that price, or where I put my take profit, you will see a reaction down. There should be a reaction. You will see the market will go down. So let's watch and see. Let me try 15 minutes. Yeah, let's try 15 minutes. You will see what's gonna happen. Let's go 5 minutes, because that's where you're gonna see it properly. Let's see 1 minute, even on 1 minute, but now the screen becomes very small. Let's do the 5 minutes and see what's gonna happen. I put my, this is Nasdaq anyway, I put my TP right at that last up candle, which is the bullish candle, but in this case we call it the bearish order block, because it is the one that caused this sell-off, this explosive move. So let's see what's going to happen. I'm trying to show those who do not know about order blocks, what do they mean on your chart or in your chart. So let's see. Sorry, let's wait and see. So after it goes and taps there, I'm expecting to see, there could be wicks hovering by the body of that green candle, or should I say the bearish order block, and then the market will be, for me the market should now come sell off, and you see, and take any sell stops resting below. So if you entered your market for buy, maybe you move the stops up to here, now they're gonna come for it, and anything below here, those who did not move anything, they still in the trade but never moved their stop losses, especially the big banks. They don't care because they've got big money. They don't move their stops. They will leave their stops resting. Let's say they entered here, the stop loss, maybe it's there. They'll just leave the market to flow, and the market will come for it. Let's watch and see. I'm expecting to see a reaction like when it happened here. There should be a reaction. Let me take this profit. Yes, I'm on a demo because I'm practicing my concepts. That's why I'm trading on a demo and also testing the broker. It's XM for me. I think I'm very comfortable with it. It makes sense for me in terms of when you are in profits and when you are losing, when you are negative. I've become very comfortable with it, especially trading the indices. It's not heavy. They very adjusted it very well. I will advise, especially the beginners, to use it. Okay, let's see, people. Let's see what's gonna happen. I'm expecting to see market doing, I'll never say reversal, but the market responding from that candle's high and then that candle's low or body. This is what you call a fair value gap. And this is bearish order block. Order block, bearish order block. Do this. Change the color to just say white. This green candle there. It is very other block. That candle there. I would like to see, because the price has filled, has gone to repaint. You see, when you paint, you push your brush up. You have to push your brush down, up, depending what layer or how many coats you are doing. But you will usually brush up, down, up, down. So the market now went to brush up because it never went there. The brush is going, the painter is going back to repaint and balance. Now they're gonna go down because they are done repainting. I would like to see the market going down, and the market can just come here and start buying again by this fair value gap, or just to tap this bullish order block. This is the candle that caused these highs to be taken. So this candle is very important. I will also mark it. So in other ways, I could sell this market, but I do not like doing that as if like I'm gambling. The bias is buy, so I will only take the trades when I see a signal for buying. So this market could come to this bullish order block. and start buying again, or it could come to the Asian low, and take any sell side resting below and start buying. Or the market could also come to this order block, because it's very significant. It started yesterday when the market was doing a change of character, start to buy. They can also come here, be mindful of that. And on S&P, I saw there's a gap. That gap will be a classic support and resistance. If we go to S&P, not S&P, sorry, US 30. Let's go 5 minutes. You see how the market is selling off. There was I saw there was a yesterday market cap. Where is it? You see this thing? That's why I hate it. Alright, anyway, let's continue with the Nasdaq. Where is that Nasdaq? This one. See what I told you? Did you see what I told you is happening? The market is selling. It's responding to this order block, because this is what happened for this sell-off the last time. So it is respecting the order block. Let me do this. It is respecting that green candle, that bullish, that bearish order block. So you can see now the market is going down. So 4:30, 9:30 New York time, we will see if this market is not gonna come and reprice from here, because this is what actually happened yesterday. The market started buying off, from here. The market started to rally. So the market could come and want to tap this bullish order block, and also repaint the fair value gap there. Let me write, and start buying. There's a fair value gap there. Be mindful of that fair value gap. Don't ignore such. This is the footprints of the algorithm. Don't ignore. So I could take a trade and maybe take profit here, but as I said earlier on, because we are in bullish markets, it's rather to wait and take only where you are satisfied that the market is now prepared to go to the direction which is the bullish biased. So rather do that. But as time goes by, maybe I'll be comfortable enough and will be buying and selling at the same time. buying, you will be doing and selling. Participate in all the directions. So let's see how it's gonna end. See what's happening. Look at that candle, how big it is. Because now they've put everyone up. Market is doing continuation. Remember, this is Nasdaq. Yes, you can participate, but why not rather participate when it opens and take the opening time, which is the New York opening time, also the indices opening window, and take it as a new day and start participating, especially after an hour. Because now what's happening here, they're building up the footprint of later on for people who are trading only indices, who understand that the indices starts 9:30 New York time and start looking for opportunities. So I'm expecting later on what's going to happen. The market could come to this order block and try and get support from the low of these candles and spike down, spike all the way down. I'm not saying it could, that's what I'm thinking, that it could happen, and come down to come and rebalance this fair value gap. So also it can just take these lows and go back and get support from these lows here and come and sell off. This is what I see at the moment, but I'll leave this trade here. Let's see what's going to happen up until here, and then I will close off, and then we'll talk about it again tomorrow or later on. Let's see what's going to happen here. So sometimes the price will never just go exactly there. Remember, they know there's people who have put their buys. The algorithm knows there's people who can put their buys somewhere there, so they want to go deeper and make sure they tap everything. But usually this thing, the market will just come and tap in the middle, halfway of this green candle, 50%. On that you can see it's 50%. Let me do this. Oh God, it will just go 50% of that green candle, this candle, and then it will go back. So if you're gonna sell, you just put your stop loss here and then leave the market to do its own thing, and not worry that it will go there. It will never go there, and wait for it to sell, and maybe to be safe, take your profit right there at the top of this bullish order block and wait and see what happens. But the market should come, could also come to this, but it can't come here and then not come below this equal lows. But there's money sitting, there's a whole lot of liquidity sitting here. So I'm optimistic that the market will want to run even lower and reprice again. The opening price yesterday, the New York opening price. Let me see. Midnight New York opening price is there. Let me make it white. So one of the things you have to check again, when you know the bias, after 4:30 everything happens. When you want to take your trades, wait and see if it goes to the opening price, midnight New York opening price, just like what I'm drawing all across. You see this white line. If the market will decide to go and come in into this fair value gap, then it decides it wants to now buy. You will take your buy once the market is on the New York. Actually, this could be support, and then I'm sorry, you're gonna take your trades at this today's New York opening price here. Once the market start coming here, you can see the market, because we are the bias is bullish. The market can find some support here. That's when you can now start putting your trade from that line, the midnight opening price. And here, yesterday's midnight opening price could be used after as support going there. So if you're comfortable, you can take your trades again from there going up, although it's a risky one, because what if they're not done down there? As I told you, there's a fair value gap down here. Okay, that is the last fair value gap. Yeah, you can start looking to take your trade from here, and leave it. And here you put, if you have, let's say, 3 trades here, when you get here you put 2 trades, because you already have the profit from here going up. You put another 2 trades depending how much you have in your account. You can start putting another trades and leave it to run up to, at least I'm on 1 hour, up to I'm on 1 hour. You can take your profits. Maybe, let's see where you're gonna take your profits. You're on 1 hour. You can leave it actually to run, as long as you're not over leveraged, and maybe take your profits at this 2023 first month, the 27th. This order block, this is the bearish order block. You can take your profits there. If you are just a short-term trader, take your profits there. So people, I'm done. This is what I wanted to share with you for today. Let's see what's gonna happen. I'll update again if I had a chance, because I'm at work. I will update again tomorrow. Look what's happening. So the market should take these lows, and I think it will go and fill up this fair value gap, repaint it. The market will go to the fair value gap at the high of this candle, also the low of this candle, the body right there. I'm expecting the market, if it doesn't go here like right now, or if it goes and taps at the bottom of this, then it will want to go here, just balance here, and then go down and to pick up the lows, like how I said it, how I explained to you. This is the white line, the white horizontal line. It is the New York midnight opening price on any asset. You go to Euro USD, you go to pound, you check the line, you check the price at this vertical line, the first candle. Like this actually supposed to be here, supposed to be here at this, at the week of this bearish candle. If this market does not want to go here, then, but it's still early. I think this market should go down and finish the business. You know, those who were in the from yesterday, who bought and they didn't check, they didn't move their stop losses, or even they moved their stop losses around there. The market should come. Those who didn't move their stop loss at all, the market will come. The market is coming into this fair value gap, but also the market knows somehow there could be stop losses around their money sitting. It will just come and takes it and go away. So people, I will update you later on again. I wish I could leave this video, but it's going to be very long. It's going to be very, very long. So we'll come back again later on. Let me make this video. Let's wait. Let's see what's gonna happen. Be mindful of this fair value gap before it goes down. Either way can happen, but I'm thinking it wants to go into the fair value gap. The closing price at this up candle, the bullish candle, it's 120.90.04. I'm expecting the any bullish candle that will come and touch this candle must be the very same price. The closing price of that bullish candle will be the very same price of this bullish candle's closing price. Closing price was 120.90. I'm expecting can you excuse me for now, I'm coming. Hi people, sorry about that. Just went to the bathroom. So this is what you call price action. This is how you read price action. It tells you story, and then you have to participate according to what it tells you. You can see I have no on my screen. You don't see any indicator. Why indicators are lacking? It gives you the information very late when people have made money. You're still waiting for the moving average to cross. I do have two moving averages, but I know what I use them for. I will explain in the video later on how these moving averages help you. I will do video about these moving averages. When the market is doing this, they know somebody saw this big candle already. They are in. They've put their stop loss anywhere around here. That's why this also it's gonna come and wipe. Sometimes they put a wick just to wipe anyone that entered and put their stop loss, around. They're gonna come and wipe that and go down. Let's see. This is very much interesting. It it was very frustrating when I never used to know what I'm doing until I got a very good mentor. Now trading is very interesting to me. I can do it every day. I will never get bored of it. And also, there's times you have to be in the market. There's times you have to stay away from the market. Trading is not for every day. You just need to trade good. Some people, they trade 2 candles. They are sorted for a week. So the more you will make more money, you will see that you don't have to trade every day. You will just wait for a move. You take 2-3 candles, you are out, and enjoy with your family and friends. Not sitting the whole day in front of your monitor. This is my friend. He's also a trader. See, they took these lows. Anyone who thought the market will sell, who had this, uh, people will have the sell stops, pending orders, let me say pending orders around, thinking the market will just sell, only to find the market will just tap your money. You had your pending order here, it will just tap it and go and empty your account. You will just go with your money up here to do some business here. Also, those who are in, when they saw this expansion move, they are in, they put their stops here or maybe somewhere around here. The algorithm can come with a week and takes everything here and sell off. I hope you can see. I want the market to come to the closing price of this candle. This is the fair value gap. The high of this candle, the low of this candle. The market has to come there at the fair value gap. And look what these candles did. They went from here, find support, opening price, New York midnight opening price. They went, find support exactly at New York opening price. Look how these candles are hovering around the opening price, and then they went and then they come back and they cross. See, this crossing this week tells volumes. They're telling you that somehow we are ready to cross over, because we wanna go take some sell side liquidity resting below the Asian lows. So when we trade the indices, I'm just gonna talk about the index, although it applies, but I'm gonna talk about the index. If we are bullish, we will start taking our trades just below midnight opening price, or it's better if you take your trades below the Asian lows. When you see a potential reversal, if you want to get in early, you take your trades below the Asian lows. That is good to take a trade there. Look what's happening. As I told you, that the market will want to come and fill up the fair value gap. Sometimes it will come just in the middle of the fair value gap. The middle of here, 50% of it, because it wants to rush to do something. It will just come here, bounce off, and bounce down. because already there's taken the lows here. So it might come and bounce off from the 50% of the fair value gap, the high of this candle and the low of this green candle. But it's good if you are selling this, you'll have to just leave your stop here. You mustn't worry if whether it will come halfway point or it will come here. Your stop loss will be far away. You don't worry about it. So can you see what is price action, guys? This is what you call price action. I never used to know this, but now I'm very comfortable in trading in this manner. Just price action, no indicator, nothing, just pure price action. Can you see what's happening? The candle opened right the opening price of that candle. But when it opens like that, I'm so confident that it will go and finish up here. If it opened maybe actually it opened here and then it went up. And look where they're playing around. So I want to see this candle come here. Let me do this. I want to see this market coming right there at the body of that candle and start selling off. So what they do, the big funds, they will start selling the market while it's going up. Me, I wanted to touch it there, and I will try and put a sell. Can put a sell now. I'm not overaged. I'll put my stop here. How much? €1 to make how much? €1. No, this is not good. Let's do this. This is much better. Let me see. Okay, let's just say it comes here. Stop loss will be 8 to take €10. But you guys, you don't have to do it like me. You have to put your stop at that high. candles high to be on the safe side. The market is not done yet, but as I said, they can just sell off from the midpoint of the fair value gap and start selling because they know earlier on the market will be passing, will come here because the buyers is buying, so they can just come midpoint and start selling. See what's happening? Look at that explosive move. As I said, the market can just come halfway of that fair value gap. The high of this candle and the low of this candle can come midpoint because it's rushing to go somewhere, and then it will sell off. You will see what's going to happen. The candles that will come going to be long candles going down. Can now move my stop losses in the midpoint of this candle, and don't worry that in the near future I'll be putting my stop loss somewhere right there, especially when it trades the indices. I'll put it there and don't have to worry. But for safe purpose, I don't want you to risk. I'll put it there. See where it's going? See the way where the market is going now? That bullish order block. This is bullish order block because it caused this bullish move. See the long candle? Because the market is rushing to get somewhere. It's gonna hit my TP. Come to Papa. Come to Papa. I'm waiting. I'm waiting for you. You know where Daddy lives, eh? You have to come to Papa. I'm gonna wait for you. I'm not gonna rush you. Come to Papa. Come to Daddy. Yeah, you. Come to Daddy. Waiting for you. Papa is waiting for you. Price action, people. Don't stress yourself. Learn to read the candles because they've got a story to tell. They've got story to tell. So the market was already done the job here when they took every liquidity which was resting here. That is why I am so comfortable or confident. You can see that this candle already done the business here. So this candle has to come here. The business was done already. Also, as it's coming here, it's coming to the order block. Also, to come take, or we can just say now, whoever that entered here for buy, the market came and took their liquidity or the stop loss, which was here, or sell side liquidity, which was here. So, but the market, it has to come and bounce on top of this bullish order block. Look how the price is playing around the opening New York midnight opening price. Look how they're playing. So if it's gonna go, if the candle should go where I say it should go at the other block, is gonna find support, or should I say resistance here, and then go down. Are you watching, people? That's pure price action. You need to be patient with the markets. The markets are not your friends. If you're not patient with them, and if you don't understand them, this is a losing battle. I'm not saying I'm the greatest, but my advice: be patient with the market, understand them, study your price action, and you will see there's going to be difference into your trading. Your trading is going to improve massively. look at how this candle opened. It This one opened below the opening price, this one opened below the opening price, and look how this one opened exactly below the closing price, just exactly on the opening price of that last candle. So it will give it, it will support it to even go down. they can also go back there to finish the business at this fair value gap, or they can just return. They can just deal with this fair value gap and come down. As we know, people, the market does not go in a straight line. Let me extend this midnight opening price. Come to daddy, come to daddy, come to papa, come to papa. Come to papa. Come to papa. Come to papa. I'm waiting for you. Come here. Come here. You must check the speed. Because of these lows, you will see there's gonna be speed. Usually when the market goes to the lows or when it's close to the highs where there's liquidity resting, it just goes quickly there. Okay, people, I'm gonna wait for this market to come here. Otherwise, I'm at work, as I told you. I have to go for lunch. Once it comes to my take profit, I will stop the video, and I will be chatting with you again later on. See, I think there's an event now. Now they're gonna use the event to take any stops. Let me see what time was. What is the event? The CPI events. Usually events will be used to take any stops or to force forward the market. So let me just leave the trade anyway. The news came out negative for euro. It was CPI news. They came negative for the euro. And I see today we have non-farm payroll, and then we have FMOC. We shouldn't be in the market actually. When we have events like this, big events, you have to stay aware of the markets and participate after the events. Actually, this is a breaker. This is the one that caused the highs to be taken. So usually the market can just come to the midpoint of this breaker. So let me go out of the market. The market, but still, it's still on my take profit. So this one we call it a breaker. It went up and it caused this up move. It's a breaker. It went that way, and then this, and then up. So usually the market will respond when it gets to this breaker. That's why you see the price playing around the midpoint of that candle. Let me take the big profit. That one, it doesn't matter. Even if I lose €1. Let me see how much is the stop loss. You see, it's nothing. So I'll leave this trade to run. I took out big profits. Okay, I will stop my video now. We'll talk about this market earlier on. See, this candle is playing on top of this candle. Because it's a breaker. It is the one that caused the highs to be taken. Where is it? It went, where is it? It's this one here. Let me do this. This candle is a breaker. This one here. It went up and then sell off and then went up. So it is very important, this candle. It's a breaker. We call it a breaker. It is the one that caused this up move or the bullish move. This one and this one, they're friends. They work together. This is going to be support here because it is the one caused the up move. There should be reaction, this candle and this candle. So let me switch off for now. and then I will update the market later on. Thank you. Sign out. Bye. Enjoy.